hear me? If you want to answer, please unmute yourself and speak. Okay. Michael, I'm going to give it back to you.
I'll take it. So this has been a challenge for us because I can give you again a quick stats. I mean, the typical Kaswago user has about 3 years of secondary education. That's after primary school. So I mean, even secondary school finishing is above average for us. It is not an easy challenge trying to get someone who barely has secondary education to use a smartphone and use an app effectively, unless, of course, you recognize this at the design stage. You listen to them very carefully like we did. Tony can tell you we had more than 3 rounds of focus group discussions with these same people to learn what they wanted to see in an app, and you design the app to their specification. So again, it takes more work to attend to the level of cognition and preferences that people have, but it can be done, and Kaswago is an example just to show everyone that it's been done.
Yeah, I really like the idea of not assuming that you have to read to be able to use technology. Maybe we need to design technology in such a way that people are less reliant on reading. I fear we might have lost our online audience. But so in closing, because I've got no more questions, I'm going to ask each of you an impromptu question. Just because I know in the audience we've got many people who are keen on starting a business and using tech to as part of that business. So if you had to give one piece of advice to someone who is busy building a startup, thinking about a startup, what would that be? And Michael, I'll give you second because I know it's a bit out of, maybe, I don't know if it's fair to ask you, but Ademola, please, what would your response be?
More than one piece of advice, but the first one that comes to mind is to, I think you need to go pursue it for something probably other than the money, and to have a genuine commitment to whatever impact you're trying to achieve, and get used to a lot of emotional volatility. Yeah.
Thank you. Like that, because if I heard you correctly, you said you must do it for the passion, not for the money. Great. Michael, your thoughts?
I'll be honest and tell everyone, Kaswago is a research project waiting to be a business. So if you are interested in being our partner and turning to a business, please talk to me. Beyond that, I'll tell you, we started this, just like you said, because we saw a need. It's because of something. It wasn't because of money. We cared about a subject and a topic, and that's what got us into it. You will need that on the days when things get tough. Trust me on that. But again, it's been a joy, and I can't wait to see what happens next.
Thank you. So that's the end of our session. Thank you, Ademola and Michael, and thank you to the panels the panel members online who we unfortunately lost. I feel very sorry for them, or sad for them. Thank you to everyone in the audience. I'm going to hand over to Koromone now, who has got a big surprise for everybody, or something exciting to announce. Thank you, guys, and thank you for your time.
Thank you. I can go. Thank you so much, Baron, and thank you to our panelists. Okay, so before I introduce our music performer, I just have to say, I need more ginger from you guys. The energy level is a bit low. I need ginger. Can you guys give me ginger? Okay, this is a tech conference, but this is TechCabal. Okay? We're not just your regular tech publication, so we need ginger. Can I get ginger, please? Okay. All right, so I am very excited to introduce our music performer. Okay, his name is Bodge. Okay? Yeah. I like to describe him as a culture connoisseur. Okay, a culture custodian, right? If you like Lagos vibes, the chill, the beach, palm wine music, just vibes, then Budge is the person you want to listen to. Okay, I'm a big fan, and I'm very, very excited to hear what he has in store for us. So please, with no further ado, I'd like to bring up Budge. Budge, where are you?
Your sound.
Yes, yo. What's up, yo? How you guys doing today? Yes, my name is Budge on the microphone. Yes, let's go. Show my by me sorrow. Show my why you gon' make things soft, oh yeah. See, me only bad day, you be tati bad day, malo sare. See me I'm an alter guy, see me with my alter pie. Look we flying. She never seen anybody like me. Ginger me, spiritually, financially, mentally, physically, culturally. Oh. See me when I come on, Judge I know the wrong. See me I'm a stunner. Long time I'm a sugar in the corner. Show my why, show my for me kokoro. Show my why, show my by me sorrow. Show my why, you gon' make things soft. Yeah. It's my day, malo sare. Get on, I'ma give you too bad. I'ma give you too bad. I'ma give you too sabi. I'ma give you too bad. Say she want to go to London, yeah, we will go to London too. She want to go to Miami, yeah. See body, I never see this guy body. See this guy body, hey. You're too bad, I'ma give you too bad, you too savvy, hey. See, mo fa sìgá, mo pa owó lọ́wọ́, mo jayé lọ, mo fa owó lọ́wọ́, hey. Mo pa owó lọ́wọ́, pa owó. Mo fa sìgá, mo pa owó lọ́wọ́, mo jayé lọ, mo fa owó lọ́wọ́, hey. Mo pa owó lọ́wọ́, pa owó. Hey yo, make some noise for my band right now, man. sabi the walk. I'm enjoying myself here. That's what's up. Let's go. I go by the name of Budge on the microphone. I've been doing this for a long time, you feel me? And I'm still out here. It's not easy. Like, oh, I'm out to bed, man. You feel me? There's always boundaries, you know, that we have to break through. We always have to kick down the doors, you feel me? To get where you're trying to go to. See, everything is turning out how I want it to be. Time no dey lie, destiny is real. These motherfuckers want things to happen to me. They want me to die, pray for my demise. Even if I fall, I'll get back up. I can't do it by myself, I don't need backup. Some people talking about giving up. Me, I tell them, see, me, I can't relate. Cause I'm death proof. Ain't finna die, so we ride. Oh, you, death proof. Ain't finna die, so we ride. See, mo fa cigar, mo ba wo lọ́wọ́, mo jaye lọ, mo fa agbo lọ́wọ́, yeah, mo ba wo lọ́wọ́. Let me tell you one more time. See, everything is turning out how I want it to be. Time no dey lie, destiny is real. These motherfuckers want things to happen to me. They want me to die, praying for my demise. Even if I fall, I'll get back up. I can't do it by myself, I don't need backup. Some people talking about giving up. Me, I tell them, say, me, I can't relate. Cause I'm death proof. Ain't finna die, so we ride. Whoa, yo, death proof. Ain't finna die, so we ride. Yeah. Mo fa cigar, mo ba wo lọ́wọ́, mo jaye lọ, mo fa agbo. Make you no fuck up. She don't go wrong up. Make you no fuck up. Oh yeah. If your life ever leave me, no good. If your life ever leave me, yeah. If your love ever leave me, no good. If your love ever leave me, yeah. If your love ever leave me, no good. If your love ever leave me, yeah. If your love ever leave me, no good. If your love ever leave me, y'all feeling good today? Okay, break it down. See, loud deep born, any day wrong. See, money for sure. Yeah, we were darling before, remember, but now guys are popping again. Yeah, guys are popping again. Guys are popping again. Yeah, Kabir, what's up, man? Guys are popping again. Gabo wanted to tell you. Òtútù mú mi, ọmọge ṣó máa tẹ̀lé mi. Mú mi, ọmọge ṣó máa lẹ̀ mọ́ mi. Calm me down, baby, calm me down. My temperature dey rise, calm me down. Calm me down, baby, calm me down. I go die if you leave me. Oya, fancy ọ̀rọ̀ kò lè mọ́ mi. I swear you no consign me. She ma for me need assignment. Me I want to do your assignment. Fancy your mommy. I swear you no consign me. She ma for me need assignment. Me I want to do your assignment. Yeah. Break it down. Olaji ọmọ ní Bọ́lájí ọmọ Dàgbòrí o. Too much alcohol, yeah. I make your boyfriend jump up. Too much swagger, yeah, yeah. Yo, thank you guys so much, man. My name is Paul on the microphone. I had fun, man. Thank you.
Hello? Okay. Wasn't that great? Isn't Budge fantastic? Yeah, thank you guys for bringing that energy. That's super great. Okay, so next up, we're going to hear a keynote speech from Tosin, the CEO of Team Apt. It's going to play shortly. Tosin's a great guy. Team App's a great company, and I'm sure you guys have heard all the amazing things they've been up to. So it'll be great to hear what he has to say. Please remember that you can post about this conference on social media. Our hashtag is TCFOC 2022. TCFOC 2022. Thank you. So I guess we can play the video now.
Virtual section.
Yeah.
Unfortunately, I couldn't join everyone physically, but I'm happy to also share the joys of communing with you guys on the future of commerce. I will be talking today on the psychology of selling to informal market, essentially. And today I'm going to be sharing some of the experiences that we have had in the past couple of years building to these markets. I have just 10 minutes, so I'm just going to compress all my points into the few bullet points I've written down. We all know the informal markets in emerging markets, especially in like Nigeria, are huge. In Nigeria, for example, it accounts for about 50% of the GDP. So this is an interesting informal market that needs to be taken extremely seriously. And I'll share a little story on how we realized this pretty quickly. Sometimes in 2019, when we began to build our solutions, we set out to build our payment gateway and as well as our money point solutions for offline businesses. When the numbers started rolling in, we quickly realized how ignored this market has been. And from then on, we have now built systems that have now made us the number one company servicing offline market payments in the country. And in doing this, we've learned a few lessons. One of the lessons that I've learned seriously is that Nigerians or informal markets are not trusting. These guys are guys that have been, for lack of a better word, fucked over and over again. And they have learned over time that they need to be sharp They need to be smart. So these guys don't trust anyone. You simply can't build a solution on the basis of maybe they are going to get their money tomorrow, or things where they are find any form of risk. So we certainly need to know, as we're selling to these guys, that you need to build solutions where they have no reason to doubt you or not trust you. Examples of this will be in things like settlements. I think it's pretty ubiquitous now that settlements must be instant. Anything that has to do with their money not being complete immediately is a big problem. If it has to do with giving them writing down or giving you their sensitive details like BVN, this is going to generally require a little bit of push because they don't trust anyone. And this is it's for good reason, right? Being one of the fourth capitals of the world and the kind of things that people have seen. So it's very important to know that as we approach these markets, these guys have a psychology that's low in trust. The second thing is that these guys, God is a very heavy factor here. If there are insurtech people here, they will understand what I'm talking about. That's the biggest force that you will generally be going against in selling insurance to this market is that you're going against God. And this is basically no diss to the religious folks here, but this is the psychology of selling to them. You basically need to have a solution that does not compete with God. So you also need to generally have it in mind that if so many of the decisions that they make today, some of them can be rational, simply business driven. Some of them are also irrational, and these irrational decisions sometimes are because of some of the things that they are hearing from the religious folks. Maybe they are pastors, maybe they are alphas, maybe they are traditional people. So, and this sometimes plays a factor in how people decide to use a solution that you have given to them. Another important thing to build out here is that these guys are mobile. I think this is kind of should be unsaid. If you want to build any solution, you need to build mobile first. And this is kind of an important thinking. For example, in the design of the user experience, in the design of the tech solution, you basically have to have a mobile first thinking, which means that when your UX guys are going to design a solution, they should design mobile interface first before they think of the other interfaces like tablets and laptops. That's because I'm pretty sure more than 80% of the ways your solution will be accessed will be mostly through mobile and mostly through Android. So if you want to build a web application, or if you want to build a mobile application, you're basically going to target mobile first. And of course, data is also important. You want to have a solution that is not going to consume data. And this will show generally in the way for web applications, how it's going to be like a progressive web application that is kind of optimized for low data scenarios. Is another important psychology. 4, these guys love face-to-face. And this, for example, shows in the kind of support systems that you're going to build. You want to build a system where the support has an element of people. Informal markets hate talking to robots or hate talking to complicated systems that make it look like they're talking to a big head office. These are guys that are normally intimidated if they walk into a bank branch and they see the lady wearing suits or the guy wearing suits to attend to them in customer support. Some of them feel intimidated. They don't want to go into a bank branch. And you're bringing a solution to them and you're telling them to call a customer care line. And in the customer care line, they first of all listen to some music and somebody now talks to them in one clean English language. It's not really going to work. It's not really going to work. So you need to build a solution where there's some level of contact. Unfortunately, this means a lot of customer support people, a lot of maybe field sales people, But it is what it is, actually. It is what it is. These markets will basically react better when they know they have a direct communication with people. And they prefer to talk in their local languages. They can speak English generally, most of them. But if you could speak English to them in their own particular dialect or accent, or if you could also speak their local dialect also, it makes them kind of feel much more comfortable in reaching them and selling to them generally. So it is important as you are building your customer support solutions, your sales systems, that we all begin to think this way. Another thing to consider generally will be these guys are very entrepreneurial and they are quite smart. One of the things I've learned and I've seen, and we probably all know it, is that Nigerians are actually really quite entrepreneurial, quite aggressive, quite flexible. For those of us that sometimes live in the UK, you know, for example, how inflexible systems are. If you threaten an average Nigerian that you're taking your business away from them, they will move all the earth to make sure that you come back. They're naturally customer centric, but in other much more advanced economies, things are a lot more structured, and you basically need to just basically wait your turn. But things are a lot more flexible in informal markets. They're really quite entrepreneurial. They're really driven to make successful solutions. And basically in doing this, it means that if many of the infrastructure issues are solved, prosperity is natural. This is one of the reasons why these markets are really thriving, because everybody's out there to hustle for themselves and make a good life for themselves. Lastly, I would like to tell the story of some of the people that I have met in dealing with the 400,000 businesses that we have so far. Of course, a large portion of some of our businesses are agents. And in this time, I've actually seen some people begin with us and actually prosper a lot on the basis of giving them tech solutions that will enable them run their business. There's a certain entrepreneur that I met sometimes back, and the entrepreneur started their business as an agent. But when I met this entrepreneur, I realized that this entrepreneur is actually quite really smart. And of course, they got into agency business because it's another business that they're doing. And this is typical for many of the small business owners. They do multiple businesses, not just one business. It's almost as if it's a thing. So it's a thing of pride to have multiple businesses, like they're MD and CEO of multiple businesses. So as we began in touch, because I used to get first line information from this business owner, and on the basis of the person using our platform, we became close, and I saw how this person steadily rose from becoming an agent to setting up a bakery. And from that, of course, they were also reaching out to get access to loans, get access to payment solutions. From the bakery, the person successfully reached out to set up the bakery, and the person also began to set up a school, all in the space of 2-3 years. And after the person was using loans heavily as a leverage. And after a while, the person now set up then I think I mentioned bakery, school, agency, and then a printing press eventually. And when I kind of like visited the location, I saw how the person had built systems, actually in an informal market, has built appraisal system, monitoring systems in an informal way that allowed people to actually be quite motivated to build to grow the organization. And some of these appraisal systems are similar and in some cases better than the ways we formal markets have built our businesses. And this gave me the epiphany that a lot of times we don't have differences, either big business or small businesses. The difference are the opportunities that we all have. So this, to me, is a way in which we all have the opportunity to build something really impactful for our different markets where we will be able to help all these small businesses who have as much dreams as us as entrepreneurs, as business owners, as executives in businesses, to be able to allow these other small businesses to also achieve their goals and dreams, because they all want to grow and make money just like us. So in addition to all of us building a business, in addition to us all trying to become successful, it's also a very noble, impactful goal. And this is something that's making me really excited. Thank you guys for having me. I hope we have wonderful time talking together, and God bless you all.
Okay, that was an insightful keynote address from Tosin. So we're going to move on to the next session. Okay. Okay, thank you guys. So our next session, we're going to be focusing on mobile money. Mobile payment services are becoming more popular globally as a cash substitute for people in low and middle income nations. And as of 2020, over 1.5 million P2P transactions were processed every hour. In our next session, which will be moderated by Damilare Dosumu, we'll be speaking about why mobile money is at the heart of Africa's economic growth. Damilare is a staff reporter at TechCabal. Hi, Damilare, please come up. Thank you. Okay, please welcome him as it comes up. Thank you. Thank you very much. Thank you.
Hi, everyone. I'm a little bit nervous, so yeah. I need your support. Please pardon me to quickly pull up my. Thank you guys for coming again. My name is Damilare from TechCabal. We are going to be talking for this panel about why mobile money is at the heart of African's economic growth. Joining me will be my. Okay, I think I'll just have to read their name. Nika Nagavi. Nika Nagavi is executive director of MFS Africa. I need to let you guys know that you're only going to be seeing me on the stage. I'm the only one on the stage, so get used to it. Every other person is joining virtually. Esige Agwele is the co-founder and CEO of Corel D. Corel D is a company, is a Verify Me company. Hi Esige, how are you doing?
How are you? I'm happy to be here.
Very well, thank you. The top person is Fauzia Ali Kimanthi, Acting Chief Consumer Business Officer at Safaricom. How you doing, Fauzi?
Hi, everyone. Very nice to be here. Thank you.
Thank you. How you doing, Nika?
Great, thank you. I hope you can hear me.
All right. Thank you very much. For this panel, we just want to understand the role mobile money is playing in the entire African commerce space. Mobile money is big. We see what's happening in the Eastern Africa with Safaricom, M-Pesa. We see what's happening in the Francophone with Wave, with Orange Money, with Free, and some other players. And we are definitely, very soon, we're going to be seeing that traction happening in Nigeria as well with MTN, Momo, and Airtel. So just to let you understand that there's a trend here, and mobile money has a very big role to play in the Pan-African or cross-continental e-commerce or commerce space. So I'm going to be starting with Nika. Nika, how are you doing once again?
Great.
How's the weather over there?
It's a bit cloudy, as you can see.
It's cloudy.
A bit chill, yes, yeah. Nothing like Lagos.
All right, it's cloudy over here too. Nika, I would just like to understand, this year, 2022, what do you think is the biggest development in the mobile money space?
Great question. So first, I don't think we will see much change in mobile money operations or how mobile money is delivered today. But there are two key trends. I don't know whether you can hear me online. I can hear you.
Yes, we can hear you. Can we? Yeah. Yes, we can hear you. So just make it a little bit audible, louder. So.
Okay.
Yeah.
So I'm gonna start using my singing voice. So. So first, I don't think we'll see much change in how mobile money operates today or how mobile money is delivered today. But there are two key trends that I think are worth keeping an eye on. One you've already mentioned is the adoption of mobile money in Nigeria, which is going to be mainly driven by MTN and Airtel. And without a doubt, this will change the landscape and introduce some innovative services, perhaps through partnerships that are going to be very different from what we've seen so far across other markets. The only other parallel that we have is India. Payment service banks or PSPs in Nigeria were modeled heavily on payment banks in India, and they're expected to operate as part physical, part digital banks, and have at least 25% presence in rural areas. But they're restricted from lending, either directly or through partnerships, underwriting insurance, or dealing with FX or foreign exchange. Because of these restrictions on product offering, it is highly possible that they will face the same challenges that payments banks faced in India. And that wasn't a success story per se. Of the 11 basically payment bank licenses that were granted in principle in 2015, only 6 of them basically managed to launch, and out of those 6, only 3 of them today are they're profitable. We have to look at that, but we have to remind ourselves that Nigeria is the continent's largest adult and unbanked population. Nigeria's payments landscape, as you know, better than anyone else, has seen big ticket investments and a host of new entrants in recent years. But we haven't seen one type of acquiring or serving Nigeria's vast unbanked population in a sustainable manner. And here, when we talk about MTN and Airtel, I think MNOs have a key advantage, since 60% of the financially excluded in Nigeria use a mobile phone. And both Airtel and MTN have a wide network in the country. They have the brand name, the customer kind of trust, and also the experience and know-how of running successful mobile money services in other markets across the continent.
All right, Nika. I think we'd like to. I'm going to cycle back. Let me just quickly go to Fauzia. So Fauzia, how are you doing again?
I'm doing good.
Yeah. So I mean, how's the weather over there?
Cloudy as well?
Kenya today, it's very bright and sunny. It's a beautiful day.
All right. So yeah, how can operators in the mobile money create more value for African consumers? How do you think we can do that?
Okay, so I think there are 4 ways in which we can do. I think there are more, but let me just mention 4. And one of the things I can say is that I think the mobile industry in sub-Saharan Africa has actually risen to the challenge of ensuring that individuals and businesses remain connected. I'm hearing another sound, but let me just continue. Remain connected. But despite all this, over 800 million Africans are still not connected to the internet. So the 4 areas that I think MNOs can be able to support, I think the first one is, which I think is what led to the success of M-Pesa in Kenya, is we need to be able to innovate for both customers who have smartphones and the customers who don't have a smartphone. I think when we launched M-Pesa in Safaricom, I mean, one of the things we kept saying is that you get into a small shop that looks like a shack, leave 10,000 shillings and leave with an SMS, and be confident that when you push that, when you go to the tool and actually send that SMS to someone else through the toolkit, the person actually believes that e-value is money. It was based on a lot of trust, but it enabled people who didn't have smartphones be able to access mobile money services. So I think that's the first thing, innovating widely. But I think secondly, as more and more consumers get access to smartphones, and also government services and corporates start to provide their services online. For example, if you want a passport now, you have to apply for it online. You have to pay for it online. If you don't have a passport, then we're increasing the level of digital divide. So this is the second part where MNOs can be able to support by digitizing the base that is still having smartphone. It's still a big population, even here in Kenya. And how we're doing that is by partnering with OEMs, partnering with Google, partnering with Facebook to be able to, and also pay-go partners who are able to ensure that customers can be able to pay for a phone very slowly. We have a fantastic platform here called Lipa Mdogo Mdogo. It basically pays slowly, where a customer just pays 20 shillings a day to be able to access a device within a year's period. So that's another area where we could do that. The third area, I think, is because we have access to so much data, we can be able to use that data for credit scoring, so that we can be able to innovate and extend the products that we can be able to provide. You know, from basic credit products, savings, insurance, basically moving the envelope to financial health to enable and completely empower our customers just through the device. And finally, and most important, it's also how we can be able to transform enterprise, small, medium, and large, to completely digitize their value chains. From basic collection of money to the whole value chain collecting money. We can give various examples in Kenya from our breweries, etc., etc. So let me stop there. But I think those are the four.
So I actually have a follow-up question for you. So Nikat mentioned the recent development, I mean the biggest development in Africa's mobile money sector to be what we're currently having in Nigeria, where you have the Momo, Airtel Momo, I mean MTN Momo and Airtel coming into the market. It's like that's like one of the biggest development this year. Do you also feel that's what we have as the biggest? Do you also feel that's like the biggest development, or you have your own different, or there's a different development you think we should be looking into?
I think the way I'd look at it is this way. The macros are right towards ensuring that those two telcos will succeed. Very young population, very many unbanked, very many desiring the basic send money services, access to credit, etc., etc. And they have a lot of data. And the highest percentage of the unbanked is in our continent and in Nigeria, in all our African countries, to be honest. But now people are walking around with a mobile phone as their source of, I think there will be an explosion. With what we have seen in Kenya, apart from just Safaricom, the whole ecosystem, it builds a whole industry. I think everything will be transformed. Most people in Kenya don't walk out of their house with their wallets. They walk out with a phone, that's it. You pay for everything, from parking to food to insurance to moving your money to the bank, everything from the little person who is selling wares in a market to the bank CEO. So I think it's a fantastic and an exciting time for Nigerians. I can only wish to be there when the launch happens.
All right. All right, Fauzia, thank you for that. We're also happy, Nigerians are happy for the opportunity mobile money is bringing to the table, even though we have to scale so many audios to get there. So yeah, Esige, how you doing?
Oh, sorry, I'm on mute. I'm good. How are you? How are you doing?
I'm fine. So, I mean, as someone who has been building in the verification, KYC sector for a while, you've seen a lot of a lot of difficulties, people trying to identify their customers, and also anything, just avoid fraud, make sure that the process is seamless for everybody, for the entire value chain. So I'd like to know, what are the business opportunity presented by mobile money in Africa for big and small businesses? And to be honest, I feel like this question is a little bit cliche, but I trust you to always come with some fresh angle to it.
Thank you. No pressure. So, and it's been fantastic listening to the first two participants in this panel, and very interesting. And, I completely agree. One of the things I would say about mobile money is that it offers the dual promise, and this is why we're very excited about it, by the way, of financial inclusion in any economy, but also opening up the market for both small, I would say medium-sized and large businesses as well. Now, the reason that happens is, of course, we know with mobile money, the value, that's the virtual value, is tied to the same. So it gives that mobility and access to the masses. So everyone has said, for example, that we have one of the youngest populations, and of course, everybody in Nigeria, almost everybody has a mobile phone even before they have a bank account. So that expansion, and we're talking about an explosion. I feel like Verify Me and Core ID, our B2B platform, almost have the same trajectory also with mobile money, in terms of it's so reliant on financial inclusion, which we're seeing an explosion of in Nigeria. So really, in terms of business opportunities, the business opportunities are there for us because we are actually one of the major infrastructures that are supporting the KYC for the telcos for mobile money. So happy to to say that. And also, from the perspective of not just the financial inclusion in terms of mobility, and I know that somebody has mentioned, of course, and it's true, they can't directly give services or get in insurance, but the opportunity to build wallets that help masses with cash flow, that can give contactless payment services using RFID, the sites are the same. It also really expands the technology opportunities for all types of payments and payment products and wallet cash flow management products as well. So that's a huge dimension for a lot of businesses. And they too are customers, by the way. So we also see, people in the industry, the opportunities are so much in terms of the opportunity to build, I would say, go beyond open banking and build financial inclusion products for the masses is also there, given where mobile money is going with the masses.
Yeah, thank you. Thank you, Esige. So Nika, I promised to circle back, so I'm here. I'd like to know, so we're talking about future of mobile money, of course, future of commerce, but at this moment we want to understand what mobile money really holds in the future. So what you do essentially with mobile money is cash in, cash out, right? You go to someone who, like an agent, to withdraw money or to deposit, or you can also use your mobile number to do some transaction. Do you think at some point we are going to be able to access credit from our mobile money app, for instance, M-Pesa or MTN Momo? Now it's going to get to a point where we can actually access credit, take instant loan from our mobile money. Or do you think mobile money is not coming with that use case anytime soon?
So that's a good question because, and I'm sure my colleague from Safaricom will tell you about their success story with Shawari, that they've launched many years back in partnership with the banks. So you've seen partnerships with banks across the board with different operators being able to offer microloans using the telco and also the mobile money data. And that's a model that has been proven across East Africa and other markets as well. When we're looking at Nigeria and how that partnership will look for offering credit, that depends on the innovation that is going to happen in the market. That I'm very excited about to see how players, mobile money players, and the ecosystem will respond to this explosion of mobile money adoption in the market. But the model is already proven. I think she's best placed to tell you about their story of how they've seen M-Shawari starting from few users to millions of users, and they have other similar products that are for basically overdraft, for Lisa, etc., that she can talk about.
All right, thank you. So, Fauzia, I would like to understand from the point of view of M-Pesa. There's a lot of argument or a lot of conversation going on in the mobile money sector about free or low transaction fee. And I'm pretty sure that M-Pesa is not cheap. And we know that Wave has already disrupted the francophone mobile money market. And you will see that every other players in the market, you're trying to blend with it. What would you feel? I mean, how would you address the case of free or low transaction fee in the mobile money market? For instance, Wave enter the East African market. What do you think is going to be the trend then? I know this is a little bit edgy for you, but indulge me.
Let's look at it this way. There's always a cost to do business, but I think at the same time, we have to be cognizant of the fact of where is our customer at the moment. So we are saying our customer needs credit, by the way, which we do here. They need access to credit because they probably need to buy food and service, but at that point when they want to do it, they don't have the money. And most of the time what this credit is, it's short-term credit. And of course, there is a charge to it. We deliver it through a partnership with banks, as been mentioned. And I think if you look at it from the customer perspective, it's important for us to continue to realize that the external pressures of macros, whether it's inflation, what's happening in world markets, fuel prices, are just putting pressure on customers, that we have to look at the cost of credit. So one of the things we say about new entrants into the market is that it makes it interesting. Makes it interesting because they come up with very innovative products. They come at a lower cost. And as a result, we have to look at our cost of delivery. So because the customer is the reason we wake up and do what we do, we have to be able to deliver a lower cost to our customers. And you're right, even as you say, it's tongue-in-cheek, but overall, customers find the cost of credit high. And one of the things that we've set for ourselves in Safaricom is to align to one of our SDG goals to ensure that the remittance cost comes to 3% and below. It's a journey, but it's something we have to do through our partners. And because of the volumes that we're pushing, I mean, one of the things we were saying is that when we started doing loans, when we launched M-Pesa in 2007, only 500,000 loans had been disbursed. But now we are doing 12 million loans. I mean, already with the sheer volume, we should be able to bring the cost down significantly. So it's either the customer will push us to do that, or also competition, which I think is healthy. So I can tell you, in Safaricom, cost of credit is one of the areas we're looking at in terms of saying how is it that we can bring it down together with our partners.
All right.
So we have to do it.
All right. Fazia, I think what I can understand is that, I just have to tell you that you don't need to fret. Wave is not coming anytime soon. You can, you can chill. So you see how your market, don't worry. I think it's about 98% of the entire mobile money market, right?
Let me put it this way. While that number is quite shocking, over 90% of transactions in Kenya are still cash. So there is still a huge opportunity.
Okay. I get you. Don't worry. We'll talk later. We'll talk later. All right. Esige, quickly. I mean, we're seeing something like we're seeing a pulse in the mobile money sector in Nigeria. I mean, there's this thing they used to say, small as they shake, right? So Nigeria is also trying to to enter this. Do you think it's mobile money is promising in Nigeria? Because our banking sector is sort of like really strong, and we have a lot of like strong new banks, fintech trying to do their thing. So do you think mobile money is going to scale in this country?
I do, fantastically. I think, of course, and I think, the speakers from MFS and also Safaricom have said, we all believe, and those of us who are in this sector, I mean, they're indirectly, but we're really fintech enabling. We all believe that because all of us continue to see huge scale in the area of growth of transactions and digitalization. And then if you look at Nigeria, our ecosystem is kind of right for that, right? Where we have the youngest population potentially in Africa, and it's a very high population as well. And then we're seeing the trends, right? Everybody, and the ability for us to go to mobile phones. So I do think we don't have enough smartphones yet. So there will need to be an SMS solution. That could be a challenge, particularly as it relates to being completely compliant with KYC so that it can do higher value transactions, which means probably more revenue for the entire value chain. But even with those challenges, there's still so much opportunity, because then the opportunity to grow and sell mobile phones using mobile money data, by the way, as microcredit. Now, in terms of competing against each other, I really don't think so. I do think that they're all strong in different ways. You have your traditional banks, you have your digital banks, you have your payment service banks. And I think that if you look at traditional banks, for example, there's still the opportunity. I think we have a 16 to 20 million home shortfall in Nigeria in terms of credit, and huge credit and high value credit that I don't think mobile money is going to cover. So there's so many opportunities in the banking space. And also, as we look at regulation, the potential for partnerships, so for banks to potentially, or insurance companies to underwrite the products that payment service banks are offering to the masses are also there. So there's also huge upside for them as well, through those partnerships. So no, I don't think that they're competing against each other. It's almost different sectors, but also the collaboration is going to mean a lot for the economy and for them as well.
All right, thank you, Sige. I know you're trying to be diplomatic. I love that angle. So thank you very much. Come to the end of this panel. Unfortunately, we cannot extend more than our time. I still have like a couple of very interesting questions to ask, but I think we'll have to do that offline. So you can reach out to all the panelists after the event. Reach out to them on LinkedIn, reach out to them on social media. So thank you, Nika. Thank you, Esige. Thank you, Fauzer. Thank you, everybody, for listening. Kurumone.
Thanks, Fauzer. Thanks.
Thank you so much. Thanks.
Thank you. It was nice meeting you too.
Thanks. Thank you.
Same here. Bye-bye.
I'm bringing up Bolu.
I'm trying to even look at the next person.
Yeah. You introduce the next session, yes.
And who's the next session?
Bolu.
Is it
no, I'm supposed to, at the end of the presentation, that Bolu would deliver.
So I think you could quickly go to do that. Where's the Bolu? What is the Bolu today? What is it doing? So what is she coming to do?
She'll do agent networks. Just say that.
Okay. Wonderful. Hi everyone, it's me again. So I'm actually here to introduce someone. Bolu, can you please come to the stage? So Bolu is going to be doing a little bit presentation for us about Agent Network. Sit tight. Bye.
No, I think this is working. Okay. Hi, everyone. Good afternoon. Sorry, my voice is a bit cracked, so in case you can't hear me, I'm going to try and speak as loud as possible. Yes, so hello. My name is Bolu, and I'm a senior associate with the TechCabal Insights team. So I'm just going to start right now. So about a decade ago, the thought of withdrawing money beside my parents' house in the village was sort of a myth, right? We normally have to withdraw all the cash we need before settling in for the holiday. And if we unfortunately ever run out of cash, the closest bank was usually an hour drive away, right? And a trip that none of us usually love to make. Now fast forward to 2022, and I can't count how many times I packed my ATM card as part of an SOS package when going home. The truth is, agency banking has done more than extending financial services to the rural areas. It has also extended peace to us, the urban dwellers, knowing that our people back home can receive help with just a few taps on our phone. So this is, somebody help me move this to the next slide. This is going to come on in a bit, just a moment. Production, anyone? Okay. It was on, yes. Okay, just. So the left button isn't working, so I need that to go back. Okay. Then I need to go forward a bit. Okay, cool, thanks. So as of last year, there were over 12 million agents, with only 5.6 million of them being active. Agents in Africa make up 44% of this figure due to a 7-year quarter-on-quarter growth of 7%. Now, the result of that is providing banking services to the previously excluded. Across the continent, more people use agent networks for deposits than withdrawals. For every $3 cashed in, only $2 was cashed out. Why is this so? With the increase in mobile phone users on the continent, people log in cash via agent networks and then complete transactions via mobile money rails. Regardless, agent banking has had a significant impact on the continent, reaching the unbanked and the underbanked. Okay. But transaction volumes are not the only measure of success in agent banking. On other fronts like onboarding the unbanked, agent networks are lagging. In 2020, Access Bank reported that it added 4.6 million new accounts through its agent network in 2020, and a few other commercial banks did similarly impressive numbers. So when you visit agent terminals for tech startups, especially those in the rural areas, you notice that they are mostly idle, with the exception of agents who conduct other business on the side in addition to their agent functions. So a good number of tech startup-backed agents are cash-in, cash-out merchants, but we think they can be far more useful than that. And the only way to engage them is to provide more services through them. So we asked the question, what more services can be provided through these agents? And we ran into another problem, data, of course. Now, knowing the last mile customer is the only way to properly include them in the financial sector. Non-fintech companies like Copia Global, Jumia, and Iroko TV use agents for offline distribution. Rwanda's Irembo uses an agent network to bring government services closer to the people. Now, there should be a way to aggregate all these services into a network for last-mile delivery. Already, there are agent network aggregators whose role is to onboard and train agents. Now, retraining the sub-agents to offer more services will therefore not be a hassle. This will mean, however, more earning opportunities for both the sub-agents and the network managers. So one cross-sector combination we thought of is to turn these agents into drop-off points for e-commerce. So picking up a package I ordered online from the agent close to my house is going to be a next-level efficient distribution service. It makes economic sense to use these agent networks to reach the last mile with other services. I mean, it's even becoming increasingly expensive to run agent networks as sub-agents get between 40 to 65% of the service charge as commission. Now, new players are also entering the space. They're making the competition stifling. So agent network is really a business of volume, and it's not something that anyone can predict what volume will be daily. However, most agents run other businesses on the side while providing last mile financial services to people in their community. So maybe let's view the agents as boots on the ground for just about any digital service that needs last mile reach. Beyond banking, agent networks can be used to run most digital services. Currently, there's no data pipeline that carries nuanced operations data upstream. So usually when users perform transactions at agent touchpoints, there's usually zero data collected on who the users are. And it would have been effective to pull this data from the transaction database, but a lot of transactions are done on behalf of the card or account owners. So any data that's pulled against the account owner's name might be really skewed. So the real work here is to collect this data without it becoming a bottleneck, because as much as we want to know the users, we also do not want to make them, to turn them off with the data collection process. So we think that agent networks in the next decade will be led by operators who have access to last mile data and are able to provide more tailored financial services with it. In conclusion, the future of agent networks will extend beyond banking. Operators who can pivot without losing sight of their initial goal of increasing financial inclusion will win. Thank you.
Just introduce me.
Your introduction is this long break for sultan session? Is it long break? Yeah, it's long break. It's not sultan session. Long break is like 3 no. It's Bolo that is announcing this session, so it's your break. The front of my mic. Bolo is the one announcing.
The things you say to me don't hold me for work, yo. That you would ride with me to do is for love, oh, oh, for love, oh, for love. I know the air for no fish.
Good afternoon, everyone. My name is Sultan Kodri. I'm a reporter with TechCabal, and I'll be the moderator of the next session titled Agent Networks, an important catalyst for digital financial services. My colleague here, Bulu Watife, has given an overview of agency networks and how important they are in African financial landscape. And with me today to give a deeper insight and deeper understanding of how these agent networks are transforming Africa's financial landscape, I would be speaking with industry leaders and analysts. So with me today, I have Tommy Amira, VP Business Loans from Team Apt. Please, you can come on stage. Please clap for him. I also have here Tim Steele, the CEO of Copia Global. I also have with me Mayowa Kuyobo, the partner at McKinsey and Company. And the last but not the least, I have Oyintomi Osofison, Head of Agent Banking and Financial Inclusion at Zenith Bank. Thank you guys for joining us today. I'm looking forward to this discussion. So my first question, I'll just dive straight into the session. My first question goes to Mayowa, and it goes to us. So there's an accelerating shift to digital payment in Africa. Do you think agent networks are a critical component of Africa's e-payment infrastructure?
Thank you very much, Sultan. I think agents are the unsung heroes. And guys, can you hear me? I'm not sure because I can't hear Sultan very well.
Yeah.
Can you hear me? Awesome. So I think agents are the unsung heroes of digital financial services across Africa, where you see an increased or a significantly higher penetration of financial services. You tend to see agents as part of it. And I think that they're the intermediary between digital financial services players and a lot of people at the bottom of the pyramid. I really liked how Boluwatife started her presentation about how it took her an hour when she was growing up to be able to get cash anywhere, but hopefully that is no longer the case in a lot of our rural areas in Nigeria today. So I do think that agents and agency banking and agent networks have been they've played a huge part to play in terms of getting financial services to the bottom of the pyramid.
Thank you very much, Mayowa. I love that you highlighted the important role of agent banking in Africa's e-payment and landscape. So my next question goes to Team Skill. So you have been operating in Kenya for a while now, and you're a well-known platform. So do you think you are missing out on middle class by exclusively focusing on low-income customers?
Yeah, Copier is a business that's established in East Africa as a B2C e-commerce player, specifically to serve the mass market consumer across the continent. And that really includes consumers of middle income and low income as well. There are something like 800 million middle to low income consumers across the continent who don't have access to modern trade. They don't have access to e-commerce because their wallet size is small, they can't afford smart devices, they can't afford data, they live in remote, hard to access locations. And Copier was established to bridge that gap. We work with a network of 38,000 agents across East Africa who provide the interface for the consumer to digitally surf the Copier catalog and for Copier to be able to reach that hard-to-reach consumer. And I think that the reason it works is because Copier is able to establish a direct relationship which benefits the agent, Copier to the agent, a direct relationship with the consumer that benefits the consumer, and we leverage that existing social network of the agent to their own individual consumers. So if you can find a way of making that three-way relationship work, you have a successful agent network.
Thank you very much, team, for explaining that. So my next question would go to Toby. And so Team Up has a reputation of having one of the biggest number of agents in Nigeria. And I think this question really a lot of our audience want to know about this. So the question is, what is the micro impact of the work on Money Point has done so far, especially in the agent banking space that you're currently playing? So what is the micro impact of Money Point?
Okay, thank you. I would narrow it down to two things mainly. The first thing I think we've been able to achieve is almost allow people to gradually start to digitize their transactions, right? Because you need to let people crawl before they can walk. And so as people started to get used to agents, right, they started to clamor for more financial services, and they started to kind of become more receptive to digitize like channels, right? Which is extremely important because, as the last speaker said, it's extremely important that we can digitize their transactions beyond cash in, cash out, which happens at an agent network. Because you want to be able to see the individual transactions, to be able to determine if they are creditworthy, understand their spending patterns, and provide far more services than you can beyond just cash in, cash out. And what we have seen that has happened is the customers who have been going to the agents every day and have gotten used to that kind of transaction have started to become more receptive towards other kinds of financial services, whether it's insurance or credit or anything else. In fact, sometimes they're the ones who kind of bring it up to say, hey, you guys already helped me like put money in my account. Can you help me insure my shop? Can you give me credit that I can use to buy more stock? So I think one of the things that we have done or that we've been able to achieve is we've been able to allow these people gradually become more comfortable with digitizing their transactions. So a lot of these people who only used to use cards before, now they have downloaded their mobile apps, now they're able to do a lot more things that they were kind of a bit edgy about originally. The second thing I think we've been able to achieve is actually kind of empower people, because as you said, we have a whole bunch of agents in the almost like 200,000, and each one of those people is basically employed as we speak, because they're able to provide for their families with this service. So even beyond the service that you're providing to the end user, there's some sort of empowerment that is happening for the agents who, as my fellow speaker said, they're kind of like the heroes of the whole thing. So I think those are the two things that I would say are some of the most micro achievements that we've been able to achieve.
Thank you very much, Mayowa, Toby, for explaining that. I love the fact where you explain how the money point is employing agents and helping them make a living. So that leads me to my next question for Oyintomi, and it is Genesis Bank is a traditional bank, and I'm trying to understand the experience of the bank in the agent banking space in the face of competition from fintechs.
Okay, I'll start first of all from the banking side. Can you hear me? Okay. All right. I had to take that closer. I would say that from the banking experience and how we have experienced competition and how we have also done well. When the banks came in, yes, we didn't really have competition. It was basically just us. And so therefore it meant that sometimes we were looking at things from the way the banks would look at their normal transactions, instead of actually listening to what the agent wants and what the agent is telling us to do. So yes, we started and we were going fast because yes, there were not the likes of the team apps around and money points and things like that. So we were, and because we didn't really have competition, the agents also didn't have any other things to do or any other competition that to just use the bank. So we were growing at a very fast pace. But then we started having competition and the fintechs coming in, and then they began to do things a different way, which means they started listening to them and saying, these are the problems that we have and we want you to solve them. And then we realized that this is beyond just cash in, cash out, bills payments and things like that. And then we had to understand that we had to empower people. We started doing youth empowerment. We started doing women empowerment. We started giving back to the society. We were training people. And then because we already have the branches everywhere anyway, so it was easy for us to get those things done for us because we had the human capital. We had people that were trained already. So an agent could come, we could train them, go easily into their community and empower them and do things for them. So for us, that was what we learned about competition, and that's how we have been able to stay afloat, because we have started listening and we started empowering.
Well, thank you very much, Oyintomi. And I love the point where you said you guys leverage your previous physical and human capital to since you have branches all over the country, you guys leverage that to reach these agents and also train human resources to become self-sustaining. So I think my next question would go to Mayowa. So I think I would love to understand the role that I'm coming. So what has led to the progress that we see today in digital financial inclusion in Africa?
I think there are a number of factors that have driven the financial inclusion that we see in Africa today. When we tend to talk about financial inclusion, I think one of the things that I am becoming increasingly convinced about is that financial inclusion is not only about opening a store of value. So whether it's an account, whether it's a wallet, whatever it is, I think we need to think about financial inclusion broader than just a store of value. So I love the slide that the lady who spoke before talked about the sort of the gradients of financial services, and I think some of the speakers here have spoken to it as well. So I think, when we think about financial inclusion, I think the first thing I'll say is let's think about it broader than just opening an account or opening a wallet or whatever. I think there are a number of factors that have driven that today. I think that, first of all, we have what I would call secular trends. So you think about Africa. Africa is a continent that has people with an average population of less than 25, and those are the sort of early adopters of any sort of digital product. So we have a very young population. I think the second thing that I would point to is also that the cost of devices and also the cost of data is coming down. We're still one of the most expensive places to have data in the world, but it's still coming down. So I think that also has really helped to drive digital financial services. I think the third thing that we've seen, people don't like to say it, but also the role the regulator has played. So across actually the continent, I think one thing that is very, very common across a lot of the regulators is this drive to actually, one, remove cash from the economy, but also to drive financial inclusion. So I can't tell you how many conversations I've been where how do we drop down the rates of financial exclusion in our countries is top of mind for the regulators. And then finally, I think another thing that I will talk about is also the innovation that we see in the space. So we've had so many different startups, so many different, and in some markets, banks are also fast followers, but we've had so much innovation in trying to think about how do we drive financial inclusion to the bottom of the pyramid. So those are sort of 3 or 4 examples, or four causes, I would say, that have helped to really increase digital financial services on the continent.
Thank you very much, Mayowa. So my next question goes to Tim. So I want to understand the achievements you've made with Copia, and how did you make this achievement? What are the reasons behind your success at Copia Global?
Yeah, building agent networks is actually quite hard. Hearing your experience as well, it requires a real understanding of the agent. It requires an understanding of their consumers, understanding the problems that we are collectively trying to solve on their behalf, but then building solutions which make your offering relevant and sustainable to them. What we've found is that it takes time to do that, and you consistently need to be able to iterate that understanding. You also have to build a methodology of recruiting and managing and developing those agents, which is robust, highly scalable, and highly efficient, because you cannot have armies of people on the ground. It's just not economically viable. So we've built an agent network that is 81% women, serving millions of customers who are 75% women. And I think that kind of powering of the economy through the female gender is, again, something that is a major achievement and probably captures the essence of agent networks. I think also, coming back to the earlier question around financial inclusion, I think it's important not just that agent networks bring access to finance, but also from the financier's perspective, they bring access to goods which are reliable and are going to stand the test of the finance period, so that they can generate the income which will then sustain the repayments. So having that combination of a network which is both retail and services, I think is equally important.
Thank you very much, Tim, for explaining that. So I would love if our audience to drop their questions on Slido, because we will soon get to the questions. So I'll take my answers from Toby before we go to the questions. So infrastructure is one of the problems with achieving financial inclusion in Africa. So I would love to ask what kind of financial or what kind of infrastructure upgrades do we need to scale digital finance in Africa? So how do you scale the digital payment system in Africa? And yeah.
Honestly, I kind of think, I may be wrong, but I kind of think this is like a cliche thing that we keep talking about, but I'm not sure is like one of the major inhibitants right now. But, I mean, there are a couple of things that we can do better at. Maybe the availability of data, and as my colleague said, the pricing. I don't think that would have a very huge impact on the cost to the end user, but, I mean, maybe to the margins of the agent, because I don't think they will pass on that additional cost. But in terms of data, I think, now data not in terms of like mobile data, but data in general, I think that's one of the areas that we need to improve our infrastructure, and I think the previous speaker, the previous presentation touched on that as well, because that's really what's preventing us from scaling financial services from that narrow, myopic view of cash in, cash out to all the other kinds of financial services that we can provide, whether it's lending or insurance, as the case may be. And those are the actual things that would have like a major impact on these people's lives. These are the things that will increase their productivity, increase their earning power, and make them move from that economic, where they are on the economic scale, like to the higher places. So I think that's one of the things that we should focus on a lot. And I don't think it's a responsibility of any single regulator. I think we, the players, have like the biggest role to play in terms of making sure that we can actually do better in that regard, so that we can increase like the services that we're providing to these people.
Thank you very much, Toby. I think I like that you mentioned how data is something that the ecosystem needs to work on, how to gather data on consumers to better serve these agent networks. And while the team is gathering questions, I would also ask Oshofis Mrs. Oyitomi on the lens that General Bank has had over the years. So you've had a couple of experience with relating with these agent networks. So what are the learnings? And how have you achieved success with that?
Okay. Like initially had spoken when I said that the first thing we learned was the fact that we're slowly moving to the fact that the agent determines the market right now. So the agent determines what platform to use, what platform to display. It's not the customer. So the first thing is agents are multi-brand. So it's like it's someone that has access to a lot of brands at the same time. So whoever treats me the best is the first thing that you go to or you stick with. So which means the first option is to listen to the agent. The agents as well are people in the societies. They're the people that understand what the community wants. They're the people that know that this is what they want in my environment. So which is key, that you listen and partner with them. Another thing is time to market is key. We have to layer on what we have now at the agent location, the services that we have. And the quicker you are to market, the faster you can scale. Because if you're coming in at a much later time, where you have services on it, we have Kiral, lending, and all sorts of insurance as well at the agent location right now. We have people doing Esusu and all those types at the agent location, and we want to know how come they're doing this? Because that's the person that is known. That's the person that provides the digital services in that community. So for us, I mean for me, what I feel is listening is important and time to market. How fast and how innovative you are. Those two things are important.
Thank you very much for explaining that. So learning time to market and how you innovate. So I think we can take our questions from Slido now. Are there any questions that we can take? So he said there are no questions. Any last insights into agent? I just want you guys to give a kind of round up of your ideas on agent network. So just a brief overview, last words on this topic. So what we love to want the audience to know about agent networks in a couple of, okay, I have a question here. So for Toby, when you say it is the responsibility of players to build and collect data, are you calling for data sharing among players? Oh, this is a very good question. Yeah, Toby.
At the risk of sounding, at the risk of summarizing, yes, that's exactly what I'm calling for. Responsibly, of course. Regulatory, we're supposed to share data. We're supposed to share data with the credit bureaus. We're supposed to share all kinds of...
competitors.
Sorry?
The competitors.
I mean, well, the data is there, and the data is there today. It's just that maybe it's not being executed properly, but the data is there today, right? And so whether you like it or not, if you are trying to build your moat around the fact that you are not sharing data, I think you need to rethink your entire model, because somebody else will get that data one way or the other. And I think ultimately the entire ecosystem will be better for it if we have that data and in a more structured... I think the data is actually available to a little extent, but beyond what it is and executing it properly. So just as one of my other speakers said, we were doing agency banking, financial services, for years. We've been doing this since before I even left school, right? But over the past maybe 5-10 years, it started being executed really, really properly. And that's why you can see like the gains that we've made. And so I think we need to focus that level of execution as well on the data side.
Okay, thank you very much, Toby, for answering that question. So I think there's one more question that we can take before we go. Okay. What will it look like if we ask that seriously? Okay. Tim, do you have any comment to make on data, the lack of data or data sharing? Would you love to speak on that?
Yeah, I mean, clearly, I think one advantage of agent networks that are going to a consumer who was previously unreachable is that you start to create a pool of data that just previously didn't exist. Data is very powerful. It obviously needs to be guarded carefully, but data used wisely can unlock crediting decisions, it can unlock product targeting decisions, all of which can benefit the consumer. I think one key way that Copier looks at that is in the way that we seek to build partnerships. We see ourselves as an organization that's built an agent network, created access to the consumer, created a logistics and distribution network that allows physical goods to reach the consumer. What we're not good at and where we would like to extend the offering to the consumer is in financial services. So if we find partners with whom we can share mutual benefit and provide value addition to the consumer, and that I think involves a considered and careful and legal way of sharing data, then I think that's an extremely valuable way of adding value to the whole system.
Oh, thank you very much, Timmy. I love how you explained how data can help unlock value for customers and consumers. I think, okay, there's one more question. Okay, Tim spoke to going and managing agents. How can agent loyalty be practically achieved? Tim, begin for you.
Yeah, I can speak reasonably knowledgeably about this because we have something like a 96% retention rate on an annual basis of our agents. And that's because I think firstly of the level of understanding that we build up of what literally turns agents on, what makes our business valuable to them. And what makes our business valuable to them is solving their consumers' problems and just using the power of digital, the power of data, the power of a logistics network in a way that extends the offering that they would have otherwise been able to give to their customers. I think it's also about finding ways of providing benefits. We have a program of agent benefits that steps up the more successful they are within the Copier organization, and that leads them to extend their performance. We have a referrals program, which means that they benefit when new agents become more successful. So it's a whole series of small things executed in parallel that I think then provide an offering that's compelling.
Thank you very much, Tim. But I would love to ask that same questions to Intomi. So how is Zenith Bank tackling agent retention?
Okay. I think, but that's agent loyalty. That's what you're asking, right?
Yes.
Okay, because I couldn't hear very well from here. It's bouncing, sounds bouncing back. Okay, so agents want a good network, first of all. If your network isn't working, you can't get that. So the first thing is that your network must be stable. Processing transaction must be fast, you know. And apart from that as well, the services that you have on your platform as well also determines that. And how fast can I get resolution if I have a problem or a challenge? You know, and that's why you see that banks are doing very well when it comes to that, because you have quite a lot of branches around already anyway, where you can quickly go in or call or do any of those things. And apart from that, a reward system. Because if I decide to be with you, it's not like I don't have A, B, C, and D to go to. If I decide to stay with you, then I should be rewarded for staying with you. So we have that reward system as well to say, if you do this with us, then I am going to reward you for choosing to stick with us. So those are the things that we have done.
Thank you very much, Intomi, for sharing that. We have come to the end of the session. Thank you to the panelists, and thank you everyone for listening and for sharing your questions.
Oh, okay.
Say to me, don't hold me for work, you. That you would ride with me to do is for love, oh, oh, for love, oh, for love. You know want my money, don't want nobody, just want loyalty. You want my loyalty, don't want my money, don't want nobody, just want loyalty. You want my loyalty. I know the air for no. I know feet, I know feet, I know feet air for no. I know feet, I know feet, I know feet air for no. I know feet, I know feet, I know feet air for no. I know for no. I know feet air for no.
Thank you so much, guys. Well done. Well done. Yes, please clap for them. Thank you so much. That was great. Fabulous. Okay, I know we've been sitting for a while and we've been hearing a lot of people talk, but we're going to go into our lunch break now. So please go on to the back and get something to eat. It's going to last for 20 minutes. Okay, and then we're going to come back up here and move on very, very quickly. Okay, so please go get something to eat and drink. Fill your bellies, refresh yourselves, and we'll come back here in 20 minutes. Thank you so much.
Today's event?
Hopefully about logistics and then the future of commerce in Africa as the title of the event says.
I'm expecting to learn. I want to know more about the informal sector and how they are buying and selling things. Yeah, okay. I'm interested.
Gems, actually. Gems.
Yeah. Like you want a lot of insights.
GEM, yeah.
GEMs, yeah, a lot of insights.
Yeah.
I think I would just like to know more about players in the e-commerce space. Yeah.
First and foremost, I'm expecting to network with giants of the e-commerce industry and learn from you guys what the e-commerce people are up to.
I guess I work in tech, so I'm really interested in understanding what's happening in the industry in different segments. Like now I've heard about the events, which is very interesting to me. I already feel like I've learned so much, and now with like logistics and last mile, I just want to learn as much as I can about the different industries.
What's happening like 10 years ago?
Yeah, a lot is happening. Tech is enabling our health sector, and after the COVID we saw a lot of things happening where there was a big gap, and then also we see in terms of digital marketing where I play in, we see tech doing a lot of beautiful things with AI and algorithms and all these fantastic things where we see through different platforms, channels now, creators are able to monetize their content and also put out very authentic messages for brands, for agencies, for research. Yeah.
So have you ever done any social commerce? Have you bought anything online before?
I've definitely bought a lot of things online from some not so nice vendors, but yes, I do buy things online.
Yes, but the payment processes was not facilitated on that social media at the time. So we had to use normal bank transfer to make payments. Yeah, so that's why I'm it's becoming interesting now that such deals can be completed right now.
Yeah, exactly. Yeah.
What would you say is the biggest headache we're currently facing in e-commerce space in Africa?
I think the biggest headache in e-commerce is logistics.
Delivery, I guess last mile delivery, maybe payments also.
I mean, why has nobody put the Ladipo mechanics and in a digital store rather, in an online store? Why do I have to go all the way to Ladipo to still buy spare parts for my car? Why do I have? I mean, I guess
startup idea.
I guess that's why payments it will be one of the biggest. Maybe because they haven't found a way to pay those guys. But I would say, why do I have to travel all the way to Onitsha market or with spare parts market? Why can't I go online and buy those spare parts?
Future of Commerce 2022. So what are you expecting today?
I want to hear more insights about commerce in Africa and some of the infrastructure that is being built to further commerce within Africa and how the different participants can integrate with each other.
Awesome.
I think for me personally, it's just really to understand what the landscape of commerce is, what the future holds, and how we can leverage technology to drive the commerce space.
So what would you say about social commerce? Do you think it's the next big thing?
I'm definitely very bullish on it because I feel like Facebook, Instagram, LinkedIn, all these different platforms that we're going to WhatsApp, all these different platforms are places where earlier we only talked about peer-to-peer communication or peer-to-peer pictures and photos and videos exchanges, but increasingly these are places where real transactions are beginning to happen. So I feel like I wouldn't say it's going to be the future, but I definitely think it's going to play a very important part in e-commerce.
Have you ever tried buying stuff on IG, Twitter, or Facebook, and what was your experience?
Sometimes good, sometimes bad, but mostly good for me.
Mostly good. Okay.
Mostly good for me because I always go with vendors that other people recommend.
Oh, so trust is very important in social
huge.
Commerce.
Yeah.
Yes, I am.
And what was your experience?
Relatively seamless, but could be better.
What's the funniest experience you've had when you shop online?
When I shop online,
What was the funniest experience you've had?
I wouldn't call it funny, but I stopped shopping for clothes online.
Okay.
Like from Instagram sellers or things. I shop for essentials because what I order versus what I get.
Yeah.
And for me, my size is very, I'm small and I need it to fit. It never does.
Well, it has to be. At one time that I wanted to buy a GOT, what's it called? A GOT merch, and then I paid for it, and I didn't get it. So still today.
So you've never had any experience with dispatch rider running away with half of your chicken?
No, not yet.
No, I haven't had any logistics issues. I think we have more than enough logistic players actually, especially in Lagos. They're everywhere.
Would you buy now and pay later?
I would say yes. I would buy now and pay later, but I think that concept in Africa or in Nigeria in particular is still, in the fragment phase, and there is a lot of, problem in that area. And I think the major thing in that area is still data. You can basically, someone can buy, from your platform and disappear without a trace.
Yeah.
But if there is, a data system where you can track, people.
You need a data system that all the stakeholders can key into.
Yes, you can, track people, track locations and all that. It makes buy now, pay later easier, both, from the merchant side and from the end user.
Interesting.
Today's event?
Hopefully about logistics and then the future of commerce in Africa as the title of the event says.
I'm expecting to learn. I want to know more about the informal sector and how they are buying and selling things. Yeah, okay. I'm interested.
Gems, actually.
Gems. Yeah. You want a lot of insight.
GEM, yeah.
GEMs, yeah, a lot of insights.
I think I would just like to know more about players in the e-commerce space. Yeah.
First and foremost, I'm expecting to network with giants of the e-commerce industry and learn from you guys what the e-commerce people are up to.
I guess I work in tech, so I'm really interested in understanding what's happening in the industry in different segments. Now I've heard about payments, which is very interesting to me. I already feel like I've learned so much, and now with logistics and last mile, I just want to learn as much.
king of the streets, DJ K-Wise, live in the mix. Turn it up. In the mix.
What's going on, guys? I go by the name DJ K-Wise. Tell Nation, Happy New Year! Let's go! Hey. Ciao!
I can't face it all alone. This shit is detrimental to my body and my soul. I wanna lose all the things we once had. I've done my part and I still want you back. And I have your number, and I give you a call. We got nothing on that. So tonight that I'm trying to be up, split me, make me stand on my feet. So in that to be what you want with me. She got me in my feelings. I'll be out for this kind of game. Holy Father, Holy Father, Holy Father, Holy Father. Lady Gaga, she got me in my feelings. I'll be out for this kind of game. Holy Father, Holy Father. You hate me, know me, mess with me, everybody, messy to me, my love, Giuseppe Zanotti, in a Maserati, hey baby, easy, time boy like it easy, you won't keep somebody, you lose sweet melody, I'm a leo, ojojumo lanjaye,
Tell Nation I love you, let's go!
Me, I just want to be Me, I just want to be Me, I just want to be Let me see how this thing go.
Hello?
Hello, 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 hello. I'm back. I'm back. I hope you're not tired of seeing my face and hearing my voice. Okay, everyone. Let's start coming back to our seats. I would like to request that we move up, please. If you're at the back, please move forward. We want to fill up the spaces at the front. Okay, please come to the front. Lunch is over. Our long break is over. So please, let's start making our way back to our seats. Let's start making our way back to our seats. If you want to eat and drink while you're in your seats, I think that's okay. Just don't litter, please. Can we get everybody back to their seats, please? Can we also maybe get some music as well? Vanessa. Okay. Oh yeah. Can we please come back to our seats? And Vanessa? Okay, you're there. All right. So because I'm bringing you up next. If you're at the back, if you're around people who are still eating or chatting, please nudge them gently and encourage them to make their way back to their seats. Please, please come back to your seats. So the ushers will just be ushering you literally back to your seats. So please, please come back to your seats so that we can move the conversation ahead, move it forward. Before Vanessa comes up, we have a brief startup showcase. You're going to be hearing from some early stage founders. They have some interesting things to share. Ushers, please bring people back to their seats so we can keep it pushing. I know the conversations are great, the food is good, and all of these things, but please come back to your seats. I'm begging. Team TechCabal, please also move people, if you can, to their seats. Thank you. Thank you. Okay. All right. So we're gonna move into our next session. So it'd be great if we have people seated and we can get started. But we are going to be talking investments. We're going to be talking investments. If you follow TechCabal closely, we report numbers. We talk about how much funding is coming into the continent. And Vanessa, who works at Ingressive Capital, will be moderating this conversation. So it's going to be really, really interesting. So the growth of Africa's tech ecosystem has been measured year on year based on funding rounds, based on how much money has been raised. According to the UNCTAD's World Investment Report in 2022, African countries hit a record 83 billion in foreign direct investment in 2021. Today we'll be discussing why Africa is the new stage for global investment, and this is a session that Vanessa is going to be moderating. So Vanessa, let's have you come up. Vanessa is the head of communications at Ingressive Capital. Please, can we clap for her? Yeah, hello. Yes, thank you, thank you, thank you, thank you, thank you.
Hello, everyone. I tried my best to dress as tech today as possible. So, please, everybody should be engaging. Thanks. So it's just going to come up. Okay. So I'm just going to have our panelists be here, starting with Satoshi Sinada. He is partner at Verot Capital Africa Ventures, and he's going to be here with me. Welcome. This, is it the food? Okay. So we are joining us virtually. We have Kofowola Agbaje, who is Senior Investments Associate at Kona Capital. Please, I hope that she's supposed to be on the screen. I also have Maya Gavi, who is CEO at TechStars, as well as say TechCabal. CEO at TechStars. Please give her a round of applause. Please, when you join the screen, please clap for them, because I feel like all of you are just tired. And then last but not the least, so you are prepared for this, Shruti Chandrasekhar. I hope that I did not ruin that for her. She's head of investments, Private Equity Africa, and International Financial Commission. Round of applause, please. Please, I feel like we need fillers. I know what their job is going to be is to just clap. I'm just going to wait for them to join so that I can actually start. Okay. You guys should talk about team. Satoshi, how are you doing today?
Yeah. Can you hear me? Okay, yeah. Good.
Okay. All right. So I'm just going to start with you while we wait for the others. Our topic today is Africa, the new stage for global investment. And this is a very interesting conversation because working in VC, you constantly have to have these conversations and talk about these things. So I'm going to start with you since we're waiting for the rest of them. Japan is complete opposite of many African countries in terms of population growth, economic trends. So what is the investment thesis that you're using we're using for Africa when you're investing in Africa?
Yeah, thank you for asking. I usually joke to my Nigerian friends that...
I think you might need to move closer to
Sorry?
Yeah.
Okay. Hi. Yeah, I used to joke to my Nigerian friends that they are very confident about themselves, but they are never confident about Nigeria or the market. And vice versa, when I talk to my Japanese friends, they are not confident about themselves, but they are usually confident about Japan. And I think this illustrates the gap existing between Japan and Africa. And me as an investor, I'm very bullish about African market. So I need to encourage Nigerians to be more proud and more confident about their market, their country, while I advise my Japanese friends not to be over optimistic about the future of Japan because our market is shrinking and aging. And we as a VC fund, we have a lot of Japanese companies as our LP investor, while we invest in African markets, African entrepreneurs, so we are filling the gap. And coming back to your question, I think African startups are building infrastructure for finance, healthcare, value chain, supply chain, logistics. So this is great. Startups are building industry itself in Africa compared to other markets. And this is why we are so excited about the startups in Africa. And also, the population growth in Africa is very attractive, but I think Africa is not yet to fully exploit the potential of consumers or the number of population. And what we are seeing now is transition from B2B to B2C. And consumer spending power is not as high as other markets in Asia or Latin America in Africa. And it's not just about the consumer spending power, but it's also about the supply side. So the price should come down to become more affordable to consumers. And that's why I think we need to work on more B2B to make supply chain, logistics more efficient to bring the price down for the consumers. And also we shouldn't forget that the consumers in Africa are usually unemployed. They are more individual business owners. So through B2B, we have to empower their business, increase their business revenue, and then they can become more consumers with more spending power. So I think we are in this transition. And from the eyes of the Japanese investors, we are betting on this market in a very long term, waiting for this transition to take place, and until when we start to see fully B2C market opportunities with huge population. And from the Japanese company's perspective, they are trying to outsource innovation from Africa to not just to push the product from Asia, but to come up with innovation that would cater to the needs of African consumers, and also how to approach these consumers with new ways of marketing and sales through innovation from startups. So I think mostly we are very bullish, but also we are very patient and long-term investors when we onboard these Japanese companies as our LPs.
That's interesting for you to say, because you keep saying the word bullish. And then I know that, TechCabal is what? Japanese. And then there was a lot of investments in Africa, and then it became one of the most successful investments in Africa, VC firms in Africa. And then found out that you actually have a collaboration now with Venot. So can you talk about that and what that collaboration, what the idea behind that collaboration was?
Sorry, I didn't get your question, sorry.
So I was saying that you should talk about the collaboration that you have with Verod now, the partnership that you currently have with Verod. Can you talk about that? Because, of course, they're African.
So, sorry, you're asking about our partnership with
Verod?
Verod?
Yeah, partnership with Verod.
Oh,
yes.
okay, good. Yeah, so we started our investment with focus on seed stage, and that's what we have been doing in the past 3 years. And I think ecosystem has really developed from seed stage to Series A, Series B, and we used to find more gap of capital in the seed stage, but now we are seeing more gap in Series A, Series B, because we are seeing more and more new VC funds focused on seed stage, and we are seeing global investors coming into the late stage of the startup ecosystem. So Series A, Series B are becoming more like a bottleneck in the ecosystem, and we have to focus on these growth phase startups, and that is where our partnership with Verod, which is a PE fund based in Nigeria, come from. So we call ourselves having VC mindset with PE body, which means that now we have access to the resources and expertise of PE funds providing hands-on support. And this back office function and resources covers legal, finance, ESG impact, HR, legal. So we can use all this expertise from the PE fund to provide hands-on support to our portfolio companies, while we remain very nimble and quick as VC investor, and very nimble to the opportunities that we see.
Thank you. I can see that Maya is here. Hi. Hello?
Hi there.
Oh, okay. So I'm just going to come to you, since we've been catching up with Satoshi. Sorry. Okay. Basically, my question is, and this is just pretty much, what sector in Africa is underappreciated, or do you think investors are not paying attention to right now?
So I think investors are not paying enough attention to Africa as a whole. I think there is so much talent, so much innovation right now, and so many entrepreneurs who are basically working on really exciting ideas that I'm going to talk to you about specific sectors, but in general, I think Africa is only now starting to be on the map of the VC world, and I think there's so much more potential than what the VC world is currently allocating. So that's my general answer, and then more specifically, what we have seen at Techstars, because we've been operating in Africa since 2011, and we've done dozens of investment in African companies, primarily in Nigeria and Kenya, but we've also explored investment in other countries across Africa. Is lots of things happening in e-commerce, lots of things happening in the fintech space. I think I'm not going to surprise anyone here. And then in the more underappreciated, I think, environment or verticals, definitely a lot of exciting things happening in health tech, and definitely a lot of exciting things happening in agriculture tech. And so I think fintech and e-commerce somehow are on the radars of people. I don't know if health tech and agri-tech are, and I think they should be.
Right. Okay, so currently in Nigeria, there is inflation, there is money rates going up, there is investor in the markets devaluation, there's a lot of things. So what would you say in terms of strategies to put in place and how we can manage this crisis?
So yes, there's a lot of things going on. It's not for the faint of hearts right now to be in Nigeria. But again, going back to my previous comments, lots of exciting innovation going on at the same time. So the first thing I would say, and I say it every time someone talks about the current economic uncertainty that targets, that concerns, that impacts not just Nigeria but the world in general, is that the VC world has never had more money than it has today. We're talking about $290 billion of capital that needs to be deployed. This is the highest amount of capital that the venture industry has ever had, period. So capital is there. And so if you're an entrepreneur and you're looking for capital, don't be too stressed out about it. Like, don't believe the people who say that there is no capital. There is. But, and that's my second point, be aware of the fact that we are going back to what some old-fashioned people like me may consider to be more normal, which is due diligence are not going to be wrapped up in 3 weeks. It's going to take a few months. You are going to be expected to present paths to profitability that are credible, growth plan which are credible, and really demonstrate that you have an idea that is worth founding on the basis of strong financials and target addressable market. And I know that this hasn't been really the case for the last, I'm not even going to put a date, let's say 5 to 6 years. Some may say that it's been even longer, and so that's a change, and it's going to be a lot harder to fundraise. Having said all of that, what I say to all of our entrepreneurs, and Techstars now has 3,100 companies in portfolio, so it's a lot of entrepreneurs that we're talking to on top of all the ones who apply to our programs and do not get accepted. We talk to them a lot about building a sustainable business. Techstars is really focused not exclusively on helping you fundraise. Techstars is focused on helping you build a sustainable company, a company that is going to be around 5, 10, 15 years from now. And we tell them a lot around surround yourself with the right people, including at your board and your advisory group. Like you need more than ever people around you who have gone through a crisis, who know how to handle inflation or hyperinflation, who know how to handle uncertainty. And if around you only have people who have surfed the tech valuation bubble of the last few years, it's going to be really hard for them to give you any kind of relevant advice. The second thing that we tell our entrepreneurs is It used to be that the strong focus was on top line growth. In other words, like revenue at all costs, like spend, spend, spend. It's okay, you're going to gain market share, and then you will use that market share and that growth to go and fundraise again. We are not in that timing anymore where you can go and fundraise every 9 months. And so you need to trade growth without control or growth that is too costly for run rate. Like you need to have as much run rate as you can because it's going to take much longer, referring to my previous point, it's going to take much longer for you to raise, to raise in the future. And so think about the right people around you. No one ever succeeds alone. Make sure that you optimize for run rate way more than growth, even though it's not as exciting, to be perfectly honest. I'm an entrepreneur myself. I've built 3 businesses. Like, it's much more exciting to talk about doubling the size of your company than like, how can I save more money to make sure that we're still alive and we can pay salary at the end of the month. But this is a very, very clear necessity. And then the last advice that we give to founders is see every crisis as an opportunity. These are usually when you will be forced to rethink your monetization model, to rethink who are your target customers, to rethink what is the right way to deliver your services. And that can be a fantastic thing. That can also allow you to make the tough decision that you were not necessarily super comfortable to make before. And now you have, in a way, almost like the perfect excuse to make all these hard decisions that you've been postponing for a really long time, and really put your company on the right trajectory for the future. So it's going to be hard, I'm not going to lie, or it is already hard, but I do think that you have an amazing opportunity to build a business for the really long term, a business that you're going to be very proud of in the future.
It's funny because I don't think that these things you said that people don't know about it, but it's like you need to keep repeating it so that they can understand that it's an actual thing to do. I'm going to come back to you, Satoshi. And my question is still the conversation about best practices, but this time around I'm asking from an investment perspective. So what are the best practices for investment for an investor, especially when they're looking to back into the African continent? Okay, I'm saying that what are the best practices for an investor, for an investment, from an investor, especially when he knows he's going to be investing in the African continent? Is this thing echoing?
Sorry, there's a lot of echo between ourselves. Yeah, so I think maybe based on our learnings from our investment, I think there are like 2 things that I always keep in my mind. First, I think in Africa, it's very easy to mix social pain and individual pain. And as we know, Africa has lots of social issues, maybe poverty or whatever. And sometimes we see very beautiful business model trying to tackle these very important social issues. But when it comes back to monetization, it's not easy to monetize from these broad social pain points. We always need to laser focus on individual pain points where customers are ready to pay money for the solution. When the pain point is too broad, no one is actually willing to pay for that because everybody expects that this should be public service. It's not something we need to pay money for. And Africa is one of the places that is very difficult to let people pay or let companies pay. So I think understanding the deep pain points of the users and using that pain points to monetize is very important. So I think don't mix social pain and individual pain. I think that's one. And maybe my second advice is not to just, try to define your business model as something for Africa, like PayPal for Africa. I think it's very straightforward for the foreign investors when you describe your business model based on the exact global comps. But I think the market and also the problems existing in Africa is quite different from what we see in other parts of the world. So we, as a VC fund operating in Africa, we try to identify undervalued opportunities. And that business model might not be very straightforward. We cannot maybe say this is PayPal for Africa. If you look at great business models, for example, from the companies that there were speakers today, like Teamapt or maybe PiggyVest, their business models don't have exact global comps, but they are innovating unique solution towards the pain points that exist in Africa in a unique way. So while we see lots of headline news for the fundraising for the business models that have great global comps, I think we really need to focus on undervalued local solutions, which has huge fundamental strength and which has huge market to tackle. So I think these 2 points are always my kind of learning, and that is my lesson, and I think this is something that I want to share as a best practice to other people.
Thank you very much. Hi, Kafo.
Hello.
Hi. You missed out on a bit. Anyway, I'm just going to go into it with you. So I'm going to ask, does the shift in the economy change your mind on who or where you want to invest in?
On the where, not at all, because for us at Corner Capital, we're an emerging market fund and I focus on Africa. So we're still going to invest in Africa, but on who, I think the other panelists actually answered the question a bit when she mentioned on businesses trying to focus more on sustainability and the ability to focus not just on growth, but growth with purpose and ensure you have a bit of runway. So in terms of selecting kind of businesses or entrepreneurs that we do invest in, there's a bigger focus now on your ability to show either profitability or a path to profitability. And more importantly, as we also think about the economy of Nigeria specifically, or even if you think more globally, you also need to ensure that the business has a sustainable growth.
Okay. I'm going to ask a very interesting question that keeps coming up with early stage founders, which is, what should investors look for when they're trying to invest in early stage founders? Because I feel like sometimes it's lofty.
There is a lot, and I know different investment firms probably have different criteria, but specifically what founders should be more focused on when they're raising money and how best to kind of portray or put themselves forward. One is, I would say, especially if you're early stage, is on the experience of the founding team. So a lot of people would, for example, mention the previous companies, specifically tech-focused companies that they've either worked for or that they founded. That's something investors look for a lot. A lot of people like 2 times, 3 times founders just because they have the experience of one, building a startup, but also putting together the required team to be able to build. I would say specifically now what we are also looking for, so kind of bigger than or something that's a bit more focused for us is experience in the sector. So it might not actually be a startup. We're now starting to see people that used to work in traditional institutions, but in that sector, starting companies in that sector because they've been able to either determine a problem or see someone solving something and they believe they can do it better. So kind of broader than you having experience in tech, specifically having expertise in that sector is something investors also look for. And it can either be you as a founder or founding team, or you being able to bring together a management team. So this could be your CFO, CTO, chief commercial officer, etc., that has that experience in that sector to ensure that you can, as much as possible, deal with regulation, which is top of mind for a lot of startups or founders, specifically in Nigeria. And another thing to focus on as a founder, especially very early stage, but because your business is going to move a lot and you're going to change, you're going to need to adapt as you build out your viable product, is just the ability to be very scrappy. One thing investors want to know when you're looking at investing in a early stage company is the ability for the founder to basically listen to the market and respond quickly enough to adapt your product, either because there's a change in regulation or because there's a new competitor or something similar.
I also don't think investors want to hear that you won't collect money from them and you're still keeping your 9 to 5.
Definitely not.
Okay, can I have Shruti? Is she on call? I don't think she's on call. But I'm going to ask you the question. Oh, she's here. Oh, she's not here. Okay. So I'm just going to go and say, you know what? I'm going to ask this question. What has been your biggest pain points in investing in Africa?
Is that a question for me?
No, I was asking, I don't know if she's on the call. Hello? Okay. Anyway, so moving on, I'm just going to say, I'm going to ask the question. When it comes to diversity in your businesses and your firms, what are the processes that you put in place to ensure it stays that way? It's very, very important.
Should I answer that question?
Yeah.
Okay. So one thing we do, we kind of do it on two levels at Kona. So one is the internal team, but also as we invest in companies specifically. So as I mentioned, we're a firm focused on emerging markets, and from a diversity perspective, one, I think the easy, well, not the easiest one, but one that's top of mind for a lot of people is just diversity in terms of gender. And we do that across the investment team. So just even looking beyond operations is ensuring the investment team is quite diverse. And one thing we also do very well is ensuring that the investment team are part of, either based in country or kind of part of the communities, because that also helps with ensuring that you're bringing the right voice to the table. And for our investment team, or the founding teams that we invest in, one thing we look at, one is the composition of the founding team, so both in terms of gender, we also do this in terms of disability. And because we are a global fund, diversity and inclusion has different definitions depending on the country that you're investing in. So looking specifically, if I were to talk about Nigeria, we look at, is it a local founder or a foreign founder? We look at gender diversity. And we do this on different levels. We do it for the founding team. We do it for the management team. We also do it for the full-size team. So we get our companies to report to us on a yearly basis, the amount of female employees they have, the amount of male employees we have. And more importantly, we also do it on the board level to also ensure, kind of like was mentioned earlier on, that they are having a lot of diverse voices and opinions at the table when they're making strategic decisions.
Okay, I'm going to ask the same question to you. Satoshi, I'm going to ask the same question to you. All right, so do I repeat the question? Okay, so I said when it comes to diversity in your company or your firm, how do you ensure that there is diversity? And what are the processes that you put in place to make it stay that way?
Sorry,
Diversity in your firm? Diversity in your firm, what are the processes you put to make it stay that way?
Yeah, so we try to really diversify our team, and now we have Kenyans, Nigerians, Chinese, and Japanese. So I think this diversity is the source of ideas and different perspectives, and also to expose ourselves to different opportunities because we each have different strengths. But I think the important thing is that whenever we discuss, we get to the same page and the discussion will be very fruitful. And I think like it becomes our own motivation to work in this team when you are learning so much from your teammates. And I think diversity is not just about like having different people in the room. It's more about, I think, internalizing diversity into yourself so that you can start to embrace different thoughts in yourself, and it becomes the source of your new ideas and motivation. So I think we need to have this kind of spontaneous and voluntary cycle of diversity becoming internalized and becoming motivation yourself, and that keeps motivating each other in your team. So we don't really try to design or impose specific way to retain diversity. It's more about internalizing diversity, listening to others, and keep ourselves more excited about having this diversity. So I think this is kind of universal fact, not just for the VC team having diversity, but maybe also it applies to also the startups team.
All right, thank you very much. By the way, if you have any questions, please can you actually type it and send it so that we can ask the questions? If you have them, please do so that we can, before we round up. So I'm just going to come back to you because this was a question I had for you before you joined. And it was pretty much asking, so which sector in Africa do you actually think is underappreciated, or do you think investors are not paying attention to right now?
Yeah, I'm quite biased because I focus on fintech, and I know fintech gets a lot of the headlines in Nigeria, Africa, or globally. So I think it's an interesting question to ask a fintech-focused investor. But I think for Nigeria specifically, not to reiterate what was already said, but I don't think we get enough funding across all sectors. That's still true. But if I were to pick a particular sector, then it's a lot more, not just VC capital, but a lot more innovation. It would be health, so specifically be that all variations of health tech, insurance specifically. If you were to look at the amount of insured people in Nigeria compared to any other country in Africa or even more globally, we're still around the bottom of the line. So health tech in general, just because of the lack of infrastructure, we definitely need more VC capital and a lot more innovation coming from health tech. And another sector that even though gets a lot of VC capital, I think there's still a lot that needs to be done in logistics in general. It's still way too difficult to move people, goods, money across Africa. It is still too difficult. So we need a lot more VC capital and a lot more innovation in those two sectors.
Would you say we have too many fintech companies, not as much insurtech, not as much agrotech, just too many fintech in Africa?
No, but I think people say that, but the honest truth is a lot of the companies are focused on other sectors, but just because of everyone needs to get paid, so there would be some form of financial services integrated into it. There are a lot of agri-tech startups that I can mention, Crop to Cash, Tribe and Greek, these are agri-tech startups. But because of the service they provide and the final end consumer, there's an increasing need to embed financial services. And we're going to see that across different sectors. So I know fintech gets a lot of the spotlights, but there is a lot of work being done across all sectors. And it just looks like fintech is the princess of the day because everyone needs to embed some form of financial services. For the average human being, not even Nigerian, what's most important to you is to get paid, which is financial services.
Interesting. Do we have any questions that we want to put up? Any questions? Anyone? Any questions? No? Okay. So I'm just going to ask before we go, is there any last words that you want to share with people so that they actually are aware when it comes to fintech and investment in Africa, and Africa being currently very, as my MD will say, very sexy.
Yeah, one thing to just add, because I know one of the questions you asked the panelist was on what founders should do now with the level of inflation. And Nigeria has always been a high inflation environment. I think we've been double digit for a very long time. So the founders in the country have kind of been battling with this they know how to build businesses that as much as possible can survive a lot of macroeconomic headwinds. But one thing I wanted to add more specifically to founders is that good businesses will still be, as much as possible, will still get capital. There is still a lot of VC capital available, and VCs need to deploy. Like, that's the mandate they have. So the onus is on you to be able to show why your business is viable in this economic sector. And again, as I've said it, Nigerian entrepreneurs have a way of constantly fighting through the macroeconomic headwinds. So it's not new to you. The barrier might be slightly higher, but it's something you've always done.
All right. Do you want to add anything? Any last words for people in Africa looking to invest in Africa?
Yeah, I think maybe I come back to my initial comments about Africans should be more confident about the market potential of Africa. And whenever we talk about funding gap, it doesn't mean that money is not there. Money is there standing by to invest in greatest opportunities. And I think Africa now has the most interesting, vibrant ecosystem. Whenever there are brilliant talents with some ambitious mindset or rebel mindset, every time innovation is taking place from where these people are coming together. And I think